Good morning and welcome back to the ETF Inspector. It's Sunday, November 30th, a little after 7:30 in the morning, and we're going to try something a little different today. As you saw in the thumbnail, kind of combining the Sunday videos. So we've got our typical Ulti and SLTY week look ahead. We've got our typical Lfgy and BLOX look ahead, and we also have our Wpay, but we're going to try and put them all in one big video and see what happens. So I'll bounce around. Unfortunately, I haven't figured out how to use chapters within this YouTube thing, so you kind of just have to scroll back and forth if you only want to see part and not the other. The plan, if I don't get confused, is to go Ulti, which is YieldMax's Ultra Option Income Fund, Wpay, Roundhill's Weekly Pay Universe Fund, Lfgy, back to YieldMax for the crypto industry portfolio option income fund, BLOX, which is very similar. It's X Fund's version of the same thing, Nicholas Crypto Income ETF. And then we'll finish with SLTY since there's so few people invested in it. I doubt many people are even watching for that, but it kind of goes along with Ulti since it's kind of the opposite version of that. Okay, so we'll try to move through that and see how that goes and see if this is the new way we like to do things. Reminder, follow me on X at ETF_Inspector1 for all your ETF news and letting you know when videos are premiering in case you like to catch the live chat. All right, before we get started, as always, I like to put the thank yous up front. So I recently on Friday got to interview, Black Friday, right after Thanksgiving, got to interview Mr. Mike Coe from YieldMax. He's the chief strategist. And I don't know why this went forward a little bit. Miggs, I think Miggs gave to my channel 5 times this week. It was crazy. So super appreciate you, Miggs. $4.99, and hey, might as well just follow his advice right now. Don't forget to hit the like and notification button if you're watching the video, and also don't forget to head over to watch Dividends on Repeat so you can catch Miggs and friends talking about their ETFs and their journey. All right, let's go ahead and start with Ulti. All right, we finally had a good week. It's been a long time since we've had a good week, but right there's this week. Finally went the right direction. So if we put it on the screen now, this first day is actually last Friday, so this isn't part of what we just experienced. So if we go from close of day on Friday last week to close of day on Friday this past week, it was up 4.5 cents or 1.13%, and that includes paying out 5.94 cents per share. So if it would have been up 0 cents, if it would have been flat, then they were able to distribute without losing anything. They actually were able to distribute and increase by nearly the distribution once again. So that's a good week. That's the definition of a good week. You're not going to get an Ulti that jumps $1 a share. It just doesn't work that way. That's not the way things are set up. So just trying to help you understand that. So let's go ahead and start off looking at our spreadsheets. All right, over the course of this past week, now it was a shortened week because there was no trading on Thursday, Thanksgiving, and it was a reduced day on Friday. But we still had 220 trades within the fund, adding and subtracting different underlyings within it. We have completely changed what Ulti is now. It is not a collection of 20 to 30 meme stocks. It is a collection of a large percentage of very stable, large names that aren't going anywhere, with a handful of meme stocks. So over the course of the week now, when everything is recovering, you're not going to win your trades when you're selling calls to generate income. So Monday cost 8.5 million, Tuesday cost 4.4 million, Wednesday cost 4.4 million, no trades on Thursday, and Friday cost 6.6 million. Now, before you start getting upset and worried and thinking that that's bad, if everything you bought went up, then so not only did the shares that they own go up, but they're selling their calls out of the money. They're also selling puts a lot of the time. You're keeping that put money, and you make the difference between where the share price was and once your calls go into the money. So even when you're losing your trades because it goes up, that's a good thing. If we go back to when Ulti was performing decently, that's what was happening. And this might not look decent to you, but for people that understand the way this works, right, from basically Liberation Day until mid-July, before things kind of went sideways for us, up 17.6% with paying 85% yield over a weekly basis throughout the whole time. That happened. They were losing the trades basically every single week there. That's because the share prices were going up beyond their strikes. That actually works well for the way the fund is set up. So you don't necessarily have to worry about winning, in quotation marks, the trades. From basically mid-July till here, everybody got what they were asking for. They're winning their trades. That's what winning your trades looks like, because you're going to win your trades selling calls if your share prices drop. That doesn't really work out so well. Okay, so on those days, to give an example, their share prices increased most of the time. We had one drop, but 55 million on Monday. They dropped 1.6 million on Tuesday. They were up 25 million on Wednesday, again closed for Thanksgiving, and up another 17.9 million on Friday. So overall, okay, they had to pay $24 million more than they brought in over the course of the week, but everything they owned increased by almost $97 million. So I would take that trade off in my account every day and twice on Sundays. But when we're looking at our estimate income, we start off just taking the money brought in from options trades, because this is realized gains, this is unrealized gains. So if we just look at our money brought in from trading divided by the quantity of shares, well, that doesn't work for making an estimate, because it's negative 70 cents and they can't pay us negative money. So the next thing they tell us to do is take a look at the implied volatility of the fund, and they're going to try and pay a distribution rate that matches or is close to the implied volatility of the fund. Okay, now we've had major changes now. Instead of having a bunch of things in the 80 to 100+% range, we have filled the fund with stabilizers, because that's what everybody's been asking for. And so it's going to look a little bit different. So when we scroll down, we've got 25 funds or underlyings. There are some funds in it. It's mostly stocks, but 25. So that makes 4% the average holding. We've got some a little under that, like Twilio, 2.59%. We've got some a little higher, PWR, Quanta, 5.29. That's pretty high. Meta's 5.36. That's pretty high as well. IBIT, 5.28 is on the higher side. Broadcom, 5.59. That's higher. And then we've got a couple of lower ones, Alcoa and Analog, 2.9s. All right, but as we go through, 30-day implied volatility. Now, I like to use Market Chameleon. I sure would love to get them to sponsor a video or the channel or something. I mention them every week, but they're a really good resource, not just for looking up implied volatility, but that's for the most part what I like to use them for. Just type in your underlying and you'll get your updated 30-day IV. Now, technically, they're not using the 30-day IV when they're coming up with their estimates, because they know the implied volatility at the time of their trades. I did not, and it's not very easy to look up each option's implied volatility. That's why I've created this weighting system that I multiply the implied volatility of the underlying with. Now, if you've just downloaded the holdings the way I do as well, you're going to say these weightings don't look like the numbers on the download. That's because I have basically just weighted each underlying against each other. So it takes out the cash, it takes out the government funds because we're not talking about implied volatility on them, and it actually takes out all the options as far as this weighting is concerned, because once you get options in there, then you have negative weightings because you have negative values. So this is how I do it. It's for a ballpark. It's not an exact science. Okay, so Alcoa is one of the very few that increased this week, 48%. Almost everything else is going to be a decrease. So I'm really just going to point out the three that increased. Everything else was down. Analog Devices 27.4, Broadcom 52.1, American Express 24. So see, these kind of numbers would have never even been in Ulti in the first place before the change. Coinbase 59.5, Circle Internet Group 76.8. We've got GDX 38.7, GLD 21.3. We got a little bit of gold in there. We already talked about a little bit of aluminum. Google 32.9, Hood 58.8, IBIT 46.1, IBM 26.7, and these are all updated numbers as of Saturday. That way we got the full week. Just gave them time to input Friday's trading into the volatility calculation. Eli Lilly Company 30.1, Lam Research 45.9, Meta 28%, Morgan Stanley, so we got a bank in there, we got financials 23.9, Palantir 48.4, Quanta Services 33.9, QQQ 19%, and it's a decrease. Southern Copper, so the commodities increased this week. We saw Alcoa was up and Southern Copper is up 37.2. They're both fairly new additions. NewScale Power 91, SoFi 60.5, Teradyne 44.9, the 20-year Treasuries, Triple Leverage Fund 29.8, and Twilio 36.6. Now for some reason I said 3, but I only noticed 2. Oh, I missed it. Gold, one of the commodities. Surprising that GLD went up while GDX went down, but that's okay. GDX is gold miners, GLD is gold. So basically commodities increased in volatility just a little bit this week while everything else decreased. That resulted, get ready for it, a 41.4% implied volatility. There's your calculation that I've came up with to figure that out. That's a decrease from last week's 66+%, and last week's was a decrease from somewhere in the 70s and 80s. The week before was like close to 100. So we have cut the implied volatility by more than half. All right. Now, if you don't like that, that's going to result in smaller payouts, but that's what you were asking for because you wanted them to stabilize the fund. You can't stabilize the fund with stable funds without lowering the implied volatility, but now this fund seems like it's built to last. All right, so when we take all that, put it in our calculation for implied volatility, we come up with a 32.16 cent per share distribution. All right, from there, we've got to just kind of make our final guesstimate. And this being the first week with the, now that might throw you off. Like, wait a minute, we paid 5 point something cents last week. What do you mean 32 after lowering the implied volatility? That's because the reverse split is taking place, okay? So just so we know, all the funds opening on Monday with their new reverse split pricing are Murni, Ulti, Tesla, XYZY, and Ybit. They will all open at their new reverse split price. And then on Tuesday, it'll be Fiat, AIYY, Crash, Dips, Coney, OARC, and ABNY. They will all open on Tuesday with their new reverse split price. All right. So your first thought is, hey, reverse split 10 to 1, 1 to 10, whatever. So I should have 10 times less shares and 10 times higher distribution. That would have been the case if they didn't stabilize the fund. Obviously, a 40% yield is nowhere near the old 80 and 100, so we're not going to get 10 times the 5 or 6 cents. We're going to get 10 times basically half of that. So 32.16 cents per share. And since this is the very first week handling this and trying to figure out how things are going to go, I'm going to keep it very close. So my guesstimate is 33 cents per share. We will find out on Tuesday how close I am. All right, next up, we are going to take a look at the week ahead. So we've got our different funds. All of our options have been swapped out now, so we're now selling for the end of this week, the 5th, and we're going to see how much room we've got to run before we've got to close out these options. We've got a fairly different strategy that's kind of been played on a large part. Ulti is more of a collar strategy scenario, and they do have it, right? They own the shares, they're selling calls, and they're buying puts to protect them. But they've also started this, I don't even know if I'm saying it right, 1 to 2 or 2 to 1 ratio with the puts, where they are also buying the same amount of puts a second time and selling puts for the most part above them. So it's a put credit spread, also known as a bull put spread. They're interchangeable terms. So they are trying to generate income from both directions, and it seems like it's probably going to be more on your very safe lower volatility numbers, right? So you're basically trying to trade it within a range. I'm sure there's actually another name for that, but straddles and strangles and butterflies and all that good stuff, we could spend tons of time on that. I don't memorize a whole lot of those, so I will just explain what it is. If I don't know the name, sorry. So Alcoa selling calls at 42, but we're going to only focus on what they're selling, because that generates income and it's going to have a cost to close out at the end. So that's what we're paying attention to. Alcoa selling $42 calls. They're only 0.6% out of the money. They're also selling 39.50 puts that are 5+% out. Analog Devices, actually, calls have already gone in the money. $265 calls are 0.1% or 34 cents in the money, and their puts at 252 and 50 cents are 4.8% out. Broadcom's just a typical collar strategy. Calls are sold at 410, 1.7% out of the money. American Express, back to this both directions trade, 2.6% out of the money on the sold 375 calls and 1.4% out of the money on the sold 360 puts. That's a fairly tight window, but again, American Express has a implied volatility of about 24%. There's 30 million in cash on hand. We kind of combine that with the 51 million in government obligation funds to call it dry powder, but I actually forgot to add the second half of that dry powder, so it's 81 million. Coinbase, only 0.8% out of the money on those sold 275 calls. So if Coinbase has any type of a good week, they're going to have to buy to close and roll those calls. Circle Internet Group has calls sold at 83 and 84, pretty much evenly split, 3.8 and 5% out of the money. We've got Van Eck Gold Miners, GDX. Calls are only 0.9% out of the money at 84, and puts are 3.8% out at 80. Spider Gold Shares, GLD, calls are sold at 395, 1.8% out. Now, they're trading a different strategy here. They're selling puts and buying puts as well, but these sold puts are further out of the money than the purchased puts. So this is more of a just trying to generate a little extra income before they'd have to pay to close out these sold puts. Their purchased puts would actually go into the money and be the protection that they're looking for. So this allows them to sell at a slightly higher strike when generating the income on the calls. Alphabet's Google, calls are sold at 340, 6% out of the money, and puts are sold at 315, 1.6% out. Robinhood calls are 1.9, just about 2% out of the money at 131. Robinhood made a nice little recovery. I guess it would be last week. Where do we have them? Yeah, Robin had a heck of a recovery, 19+%. IBIT 53 and 54 are the strike prices for the calls. Pretty evenly split, 67 and 6,800 contracts, 2.8 and 4.7% out of the money. IBM, more of that strong stable funds here. Calls are sold at 315, 2% out. Puts are sold at 297.50, 3.5% out. And before you think this is going to take forever, we only go quite this deep on Ulti and Lfgy. The others we'll get through much quicker. Eli Lilly Company, LLY, is selling calls at $1,120, 4% out of the money, and puts are sold at $10.70, a 0.5% out. So we don't want LLY to go down very much. Obviously, we don't want anything in here to go down at all. Lamb Research Corporation, calls are sold at $160, 2.5% out. Meta Platforms, we've got calls sold at 6. Oh, this is my mistake. That's a 655, not a 625. That helps. They're now 1% out of the money, not starting the week in the money. 1 and 2.6% out of the money, 655 and 665. We want to definitely, it's even okay if we lose the 655 trade. There's only 100 contracts compared to nearly 1,000 contracts at 665. So you could win the 665 trade without winning the 655 trade and still make out okay, as you've got nearly 10 times as many contracts sold there. Morgan Stanley calls are at 170, 0.2% out of the money, or 34 cents, and puts are sold at 162.50, 4.2% out. Palantir calls are sold at 175, they're 3.8% out of the money. Quanta Services selling calls at 470 and 490, 1.1 and 5.4% out of the money, and they're also selling puts at 400. They're nearly 14% out. Invesco QQQ, this is a slightly different setup on this. As you can see, things are reversed. The puts are purchased for this coming Friday the 5th, and then they've sold calls for December 19th. So that's 2 more weeks after that at $630. Those sold calls are 1.7% out of the money. Southern Copper calls are sold at 145, 7.5% out of the money, and puts are sold at 125, 7.25%. So that's sitting in a pretty sweet spot, barring any crazy swings, which we don't expect from a commodity. Is looking like you should win both of those trades. NewScale Power calls are sold at 21, 5% out of the money. SoFi Technologies, 28.50 is the call strike price. They're actually already in the money. My guess is they got rolled before that trade, or they went up after they had already got rolled. Yeah, so they continued to climb. They went into money. They had to roll them out to the following week, and then they continued climbing after that. So either way, nice week, nice recovery for SoFi. Teradyne calls are sold at 185 and 190, the majority at 185, 1,900 compared to 370. They're 1.7 and 4.4% out of the money. We've got, here's your full title, Direction Daily 20-year plus Treasury Bull 3 times. Shares, it's a leveraged fund, $42 calls are 1.6% out. You kind of got to leverage the treasuries if you want to make anything on them because they don't move that much. And then Twilio, calls are sold at 132 and 134. The 132 really doesn't matter. 13 contracts compared to 2,600. What's that? 200 times as many. So 1.7 and 3.3% out. And then puts are sold at 127 and 128. Similarly, only the 128s really matter. 1.3 and 2% out of the money. So all in all, there's 1.3, just about 1.4 billion in assets under management. We now see a new outstanding share count. So this is reduced by 90%, right? There was 10 times as many shares before the reverse split. So it's now at 34 million and the NAV is $40.36. So outside of pre-market moves, if there were no such thing as pre-market and the market was just going to open on Monday at whatever it closed on Friday, Ulti would start very much very close to $40.36 within a couple of pennies. It basically always trades within a penny or two of the NAV. Okay. When we take a look at our standings for the week, our average first call is about 2.1% out of the money. That means we can capture on average 2% of upside within our share price before we're going to have to start buying to close calls and rolling them. And our average put closest to the money is about 4.5% down, which means we could realize, now these are sold puts, not the purchased puts. So all things considered, you've got purchase puts in there that are going to help offset downward movement as well. But if you were just selling puts to generate income, you could actually realize 4%, 4.5% of downward movement actually before it would start compounding on you, and you'd have to be paying to close out the puts that you sold. Okay, so big picture, Ulti is going to open up around $40.36. My guesstimate is around 33 cents per share. That's the big heart of this video, 26 minutes in. Now let's start to pick up the pace on the next ones. So I think I said we'll go to Wpay next. It's much quicker because we don't have anywhere near all the information that YieldMax provides. So as far as Wpay is concerned, it is the collection of all of their weekly pay funds. Not all. They don't have the commodity ones in there. But we've got Apple, AMD, Amazon, ARM, Avgo, I believe that's Broadcom, Alibaba, Berkshire Hathaway, Coin, Costco, Google, Hood, Meta, Microsoft, MSTR, Netflix, Nvidia, Palantir, Tesla, and Uber. So they have their own 1.2 times leveraged funds for each of these that is in there, and then they've collected all of them into one big fund of funds. Now, this is the first week that I've seen where it's actually dropped in outstanding shares. So people sold out of Wpay over the course of the past week, 470,000 shares from my last week video. So outstanding shares comes to 10,570,000. Assets under management comes to just under 500 million. So they're right around $500 million. That's just your market value of everything within the fund totaled up, 498,000. They're pretty much evenly allocated. I forget how often they said they reallocate. It's fairly often. They keep it real close to 5%. But as you can see, basically everybody recovered this week except Nvidia. I guess Costco's a little below, but Nvidia 4.76%, Costco 4.8%. Everybody else is 5% or higher, so they are very, very close. I entered all of the most recent announced distributions right here. They're so nice of us to go out to 6 decimal points, 6 points past the decimal, so that takes a little while to enter. And so this is all the payments that they will receive. So if I total all of that up and then divide it out amongst the shares, it comes out to 34, just about 35 cents per share. Share price around 47.25 with a NAV around 47.19. So it's trading, 6 cents off of its NAV, and that annual yield, if they were to pay out that 34.9 cents per share based on this current share price, that would be a 38% annual yield distribution. Now we do know that it has reduced lately. That was a much higher number, but they have, they're being smart, trying not to erode the fund. It definitely, when the market pulled back, if you have 1.2 leverage on everything and they're not selling any options to generate income. So they are only banking on upward movement in their leveraged funds. Otherwise, they're in trouble. All right, so that's it for Wpay. We'll go to LFGY next. We've got just as much info in LFGY as we do on Ulti, but they're not selling puts. They're basically just selling calls and buying calls, so we can get through it faster just talking about the sold calls. So over the course of the shortened holiday trading week, there was approximately 170 trades over here in, I started to say Robinhood, in LFGY. And I had a comment in a video the other day. Somebody said, why don't they add Hood to LFGY? Like, Hood's been in here the whole time. So Robinhood right there. There's trades last week. So on Monday, they had no trades. On Tuesday, they spent $64,000 closing and rolling positions. On Wednesday, $2.8 million cost, just about 2.9. Thursday, obviously no trades for the holiday. And Friday, $2.5 million cost or debit on their trading. So they're experiencing the same thing Ulti did. Everything in the fund moving up. So you're going to have to pay to close out your options and sell at new strikes. That's going to cost you money. All in all, 5.4, just about $5.5 million cost over the week. So if we divided that out by the outstanding shares, it's a negative 88 cents. We know they're not paying negative 88 cents, so we'll move on quickly from that one. And here's what we talked about. Share values were increasing each day quicker than they could get. Not than they could get the options. Once you've sold your options, they're there. And if things move up, they're going to become more costly to close out. So share values increased by almost 9.2 million on Monday, about 789,000 on Monday, Tuesday. On Wednesday, $5.9 million increase, nothing on Thursday, the holiday, and an increase of 5.5 million on Friday, for a total of about 21.5 million in increased share values. So again, if my personal account, in trading, I lost 5.5 million, but the value of everything I owned increased by 21 million, I'll take that all day. So that's the reason LFGY also had a nice week. So we should have looked at them. And really, since we're on this, we should have looked at Wpay since we just talked about them. Wpay had a nice week as well. Closing on Friday to closing on Friday, a 6.4% increase, or $2.84. So they were able to pay out, I forget, 30, 40, 50 cents and still increase by a very large amount. So trying to recover, head back towards that $50, but obviously they had a rough month. Okay, back to LFGY. Let's go. Yeah. Speaking of rough months, really, crypto had a rough month. But this is where we're looking now. This was a good week for LFGY. Unfortunately, it's not starting all the way down here, so it's not from there. But closing trade on Friday to closing trade on Friday, a 7.5% increase, or $1.99 on a $20-something fund is a great week. Okay, so we're going to look at the IV, implied volatility, in the fund for this. Now, they have not made changes to LFGY this week. Everything that they hold is what they were already holding. All they've done is changed options. Not quite as evenly allocated. Average is about 4.17%. We've got lows in the twos with SharpLink. BitDeer and Bitmine Immersion. And then we've got some highs in the high fives. Coinbase 5.9. IBIT 5.7, MSTR 5.2, NU 5.4, and then everything else kind of in between. Spoiler alert, every single underlying within the fund decreased in implied volatility. So just overall market volatility has been dropping, which makes sense, right? Everything was dropping for that month. It was rough. There was a lot of volatility. And then things kind of recovered this week. So it's going to make sense if things are recovering and doing well, their volatility is dropping. So everything's down. We don't have to say it again. So bullish 70.4%. Bitmine Immersion still over 100, 108.4. BitDeer as well, 102.5. Cypher, I believe they're the highest, 120.4. CleanSpark 97.7. Coinbase 59.5. Core Scientific 88.2. Circle 76.8, iShares Ethereum, ETHA 69.9, Galaxy's 92.5%, GameStop 63.6%. We're talking about implied volatility here. 58.8 for Robinhood, 105.9 for Hut 8 Corp, iBit 46.1, Mara 84.9, Mercado Libre 35.8, MSTR an even 73. I say even, it's odd. NU Holdings 29.9, Nvidia 39.9. That's pretty low. Opera 41.7, PayPal 31.6, Riot is at 83.6, 1.7, and BLOX 41.2. So if every single thing within the fund dropped, our overall average dropped as well, from 77.64 last week to 68.88% this week. So the multiplier for coming up with our estimate dropped pretty drastically. But the other part of the multiplier is the share price. And so obviously I think we're at like $26 and change last Friday when making our estimate. So we climbed back up to $28.60. We use those to come up with our estimate, and it is 37.88 cents per share as far as the implied volatility. From there, we take into account everything, the trading, the movement of the share price, the IV, and we give our final, and we're going to stick real close to it. My guesstimate is 38.25 cents per share. Okay. Is there the possibility that it's higher? I would say because they went up by nearly $2 a share in the week, they can afford to give back a little bit more, have a little bit nicer percentage. Looks good, but it seems like they're trying to start make a little bit more conservative decisions. So that's going to be my guess, 38.25. Okay, when we take a look at the holdings within the fund and the week ahead, again, this is not a collar strategy. They do not buy protective puts over here. They have the ability to, but they just don't. They have it written in to their prospectus that they can do it, but they don't do it. All right, bullish calls are sold at 43.50. They're already in the money by 0.25%. Bitmine calls are sold at 35, 5.6% out. BitDeer calls are at 13.50. They are 0.6% out of the money. They're sitting in negative cash right now, and combine that with the government obligation funds, and they're actually still negative overall. So there's no money on hand. That changes on a daily basis though, so that's not anything to worry about. Either people buy into the fund and more money will come in, or they'll sell some shares to generate some income, or they'll sell some options to generate income. Cypher Mining, 1.7% in the money on those $20 sold calls. CleanSpark, 16.50 is the strike price, 9.2% out of the money. Coinbase calls are sold at 2.80, they're 2.6% out. Core Scientific calls are sold at 17.6% out of the money. Circle Internet Group, $84 calls are 5% out of the money. ETHA calls are sold at 23.50, they're 2.4% out. Galaxy Digital's 27.50 strike price, 3.4%. GameStop are actually already in the money, 0.13% or 3 pennies on the 22.50s. Robinhood's starting in the money as well. 121s are 5.8% in the money. They've also got 133s that are 3.5% in the money. Now you notice the blue, they actually have some deep in the money calls that they purchased. So $50 calls are 61% in the money. Those are kind of representing shares. So they are increasing in value just like the shares are. Currently worth about 2.8 million. Hut 8 Corp calls are sold at 44. They're 2% in the money. iBit, they've got deep in the money calls representing shares as part of a tax loss harvesting strategy that they performed, and their calls for this week at $50.50 are already in the money by $1.05 or 2%. Mara's calls are sold at 12. They're 1.6% out of the money. MBTX, they don't own any shares. They just trade this put debit spread or a bear put spread. They're betting on it going down. They purchased the 195. Current price is 214. They're 9% out of the money. As MBTX drops, this trade will become more valuable for them. So this is the only thing. Let me double check myself. I've got the colors backwards there, so I got to correct that. Yeah, this is the only thing within the fund they're actually betting against, and they have been for a long time. I ought to ask that question next time we get to talk to them on Spaces. Why have they continuously bet against MBTX within their crypto fund while betting on all the rest of them? Okay, Mercado Libre calls are sold at $2,090. They're 0.8% out of the money. MSTR calls are sold at 180 and 195. They're 1.5 and 10% out of the money. Oh, nope. I got my colors wrong again. They're sold at 180 and 187.50. So the second number is not 10%, it's 5.8% out of the money. Got colors wrong here too. Oh, didn't mean to do that. What's happening here? Those are puts. Hold, please. There we go. Now we've got our put formulas, not our call formulas in there. They're selling puts at $16. They're just about 8% out of the money because the stock is at $17.39. All right, Nvidia calls are sold at 180. They're 1.6% out of the money. Opera has calls sold at 14 and 13. 14 and puts sold at 13. Calls are 2.7% out and puts are 4.5% out. So it's kind of sitting right in the sweet spot between the two where they can win all the trades. PayPal, and they actually, okay, I take it back. This is the first I've seen this in a very long time, and they've actually purchased protective puts at $11 for Opera. They've got the other side of put spreads purchased on NU as well as PayPal also. Okay, so going to PayPal, we've got a put credit spread or a bull put spread. Selling the $61 puts, they're 2.7% out. Riot Platforms calls are sold at 16. Share price is at 16.13, so they are in the money by 0.8%. SharpLink Gaming calls are sold at 11. They're 3.5% out. And BLOX calls are sold at 68, 1.8% out of the money. So AUM, assets under management, LFGY has 176, just about $177 million. There's no change in shares on Friday, 6,225,000. The NAV is $28.42, so that means a share is worth $28.42. LFGY always trades at a little bit of a premium, currently around 18 cents. That's on the larger end of the premium, so I wouldn't be surprised even if things were flat, if that came down a few cents to get more within, I don't know, 7 to 10 cents is more normal. All right, the average call sold is about 2.3% out of the money. As you saw, we do have a handful that are starting the week in the money. That's no fun, and generally bad luck will tell you those will be the funds that move up the most, and you don't get to really capture that in our share price because that will increase the cost to close out the option at the same rate. So, but either way, LFGY had a good week, and our guesstimate is 38.25 cents. We're going to keep it moving, go to BLOX. So BLOX doesn't share their trades. We don't have access to that, and they don't actually update their holdings until like the next morning. So this is the way the fund looked holding-wise on the start of trade on Friday. So we do know we can make sense of it. These went up on Friday. LFGY had a good day Friday, BLOX had a good day, but since these holdings didn't get updated, that's why everything's going to amount to a $19.34 NAV, even though the share price closed at $19.90. It does not trade at that much premium. It's that things moved up, and so asset values will have increased, creating a higher NAV. We just don't have access to that information yet. It won't come out until Monday morning, which at that point is no good for us. So we're basically stuck with using the holdings that are 1 day behind. There were no changes if you watched last week's video to the holdings. We have all the same underlyings. We didn't get rid of any. We didn't add any. The largest holdings within the fund are FBTC, which is Fidelity Wise Origin Bitcoin Fund, HODL, Van Eck Bitcoin ETF, 15%, basically 15% each on those, and iShares Ethereum Trust with 9%. So you're looking at just about 39 to 40% of all of the assets are within those three out of the collection here. Very much similar to the holdings within LFGY, and the two are similar. Both fall under title, both X funds and Yield Max, so you get some carryover. We see Scott Snyder and Jay Pestruccelli in the About Us section of both. All right, so we're looking at options. We've got puts. It's almost all put spreads sold. So we got put spreads sold on Bullish, put spreads sold on Bitmine Immersion, put spreads on Webull. So they do have some different ones because Webull is not in LFGY, but it is in BLOX. And Webull is one that I like to trade. I like trading, selling puts on Webull. I like trading, selling puts on Mara, and both are in ranges I like to sell puts at. So I need to free up some money so I can sell some. All right, Cypher, again, put spreads, Coinbase, selling put spreads. So if you want to pause and zoom in, I don't want to just keep reading all the numbers after I just read them, but if you'd like to see the different strike prices that these are sold at compared to LFGY, just kind of pause the video. We're getting pretty long, and so I'm trying to wrap it up. Circle, all put spreads. Now I've also highlighted in this whatever color you want to call that, things that expired on Friday and would have been closed out, but are still showing up because the holdings is a day behind. So we know we can ignore those, but we look to the rest. In gray is the underlying, and then in white is the options trades that are in play for the week ahead. Core Weave, it's a put spread. So we can see iShares Ethereum Trust, they are trading a call spread on it. This one expired, but we would assume that they went ahead and rolled it and have a call spread sold again this week. Call spread as well for FBTC. And let's see, Galaxy doing put spreads. HODL, they don't trade options on. Hood, we've got mostly put spreads, but then they also have this deep in the money call purchased for Hood at 50 with an expiration of December 19th. And I would say that looks very familiar because we have December 19th, $50 deep in the money calls purchased for Hood over here on Yield Max as well. So they might share traders. Hut 8 Corp trading put spreads. Iron Limited put spreads as well. Mara, all put spreads. And then similar to LFGY again, they trade options on MBTX, but they don't own any shares. But in this case, they are selling, let's see, they're selling a call spread, which would be, it's a call credit spread. So that's a bear call spread. So in the event MBTX goes down, they win their options and they don't get hurt any because they don't own any shares. MSTR is all put spreads. NVIDIA put spreads. Riot Platforms is put spreads. And Taiwan Semiconductor, all put spreads. All right, they did have an increase, people buying into the fund this past week, 25,000 shares. They're just under 10 million outstanding. I guess not just, but 9,775,000, closing around 1990. Assets under management of 189. Now, like we said, we know that increased based on the closing price, the share price moving up all day. Most recently, they announced, if you check out my X, I reposted it, right? 12.95 cents. Declaration day was Wednesday the 26th. Okay, so they declared on the 26th. They went X on the 28th. So they pulled up their declaration day. They kept their X day the same Friday, and they will pay on Monday the 1st. And it's always 36%. So there's not really much that comes into the guesstimate. It's just going to be based on where the share price moves to. And so my guesstimate based on the current share price is next week's payment announcement will be around 13.8. Obviously, that's just 36% of the closing price. So if share prices move up throughout the week, that'll be a higher number. And if they move down throughout the week, that'll be lower. Overall, they've paid a little under $3.50 since inception, with an average of about 16.5 cents as their distribution. All right, that's it for BLOX. And I do own, so I should say I own everything in this video with the exception of SLTY. I do not own shares of SLTY. I don't like to bet against the market for the most part. Okay, last off, SLTY, we're going to go a whole lot quicker on them. We're going to try to anyway. All right, trading wise, they had about 105 trades in the shortened trading week. So they are shorting things and selling puts. So if everything recovered this week and went up, you're going to win your trades, but you're going to drop in share value because it's going to cost you more to close out all your shorts. So realized gains looks good. They brought in 295,000 on Monday, 11,000 on Tuesday, 266,000 on Wednesday, nothing on Thursday, the holiday, and another 22,000 on Friday for an overall credit realized gain of $595,000. If you divide that by the quantity of shares, that would be a 79.43 cent per share distribution. But you have to take into account they got roughed up for sure. And when I go to this, I remember that I missed it for the one before. So while we're here, BLOX. Last trade on Friday to last trade on Friday, or end of Friday to end of Friday, up nearly 16%. And that's even though they paid out whatever it was, or 12, 13 cents. They went up $2.74. So they had a great week. BLOX did. But they don't base their payments off of that. It's just a flat 36%. So all the rest, you just get to keep it within your share value. Okay, we go to SLTY, what we came here for. We got to find them. They're further down the list. Not that far. All right, SLTY got roughed up this week. They were having a good month. Not quite a good 3 months. They were having a good month. Everything had been dropping for a month, so shorten the market was working out well. But then this week, things recovered. So we've got SLTY dropping $3.29 or 8.3%. Now, a portion of that $3.29 drop is the distribution. You can kind of see it on X day there. But in any case, they got roughed up. So you don't want to get roughed up that much and then pay out the maximum just because you did well trading, because you got to take into account that you got beat up so bad. They dropped in share values 1.1 million on Monday, 200,000 on Tuesday, 600,000, almost 700,000 on Wednesday, and 737,000 on Friday, for a total of $2.7 million decrease in their share values. So we don't think they're paying 79.43. So we're going to look at the implied volatility estimate, and we'll go through this just a little quicker. They've got an average of 5.56% of a weighting. So BLOX on the higher end. Let's see, the biggest QQQ, 9.1%. I don't think we've got anything that's going to touch that. And what's going to be the lowest? 4.2 for Enphase. 3.84% in energy fuels, UU. 17 out of the 18 underlyings dropped in implied volatility this past week. Only one went up, and it was Unicure, QURE. They're an enormous implied volatility, 147.6. That's the high. Let's see what the low is. Wins at 34, 19 for QQQ. We're not going to beat that. So QQQ has a 19% implied volatility. The rest fall in between. Overall, implied volatility did drop, but not by a ton. That's surprising when all but one dropped. So 76.48%, but our share price did drop, like we said, what was it, like $3 plus? So our multiplier dropped and our share price dropped. So we are expecting a lower than last week payment. The math comes out to 53.26. I think they paid 57.4 last week. I forgot to check. 57.4. So 53 is not too far off of that 57, but I got to take everything into account and make my own guesstimate. And I stayed pretty close to it. I said 53 cents. I would guess that there's a possibility that it goes a little. It's tough. I think that's a good guess, to be honest, because it makes sense to lower it based on everything multiply-wise being lower than last week. It makes sense to keep it around 76% because that's our implied volatility. And so I think that's going to be a good guess. All right. Now, we'll just take a look at what's being shorted in the fund and what they're selling, what the put strike price. So they do a reverse collar strategy. So they're going to sell puts to generate income. They're going to buy calls to protect against the upside, because if you sold the shares to start with, you have negative shares and you have to buy them back to close them out. You want them to drop in price. So if they go up in price, you're in trouble. That's why you buy calls. Now, sometimes they also sell calls to generate some extra income and allow them to sell a put a little further out. We're not going to go into percentages since there's probably very few viewers here, but you may be interested in what they're shorting and where they're selling their puts at. So Applied Digital puts are sold at $21.50. AppLovin puts are sold at $560. Better Home and Finance puts are sold at $50. CleanSpark puts are sold at $13.50. Credo puts are at $140. Enphase Energy puts are at $27. GameStop puts are at $20.50. Lemonade has puts sold at $68 and $74. Moderna puts are at $24.50. Oracle puts are at $200. Ouster puts are at $21.50. Pagaya Technology, I've never heard of them other than talking about it in this fund, $20 puts. Invesco QQQ puts are at $610. QURE puts are at $26 and $28. Rigetti puts are at $23.50. UUUU is the stock ticker for Energy Fuels. Their puts are at $13.50. Wynn Resorts puts are at $124, and BLOX puts are at $63. There's $27 million in assets under management. The average put is about 7.5% out of the money, so they can capture lots of downward movement. If everything drops, their share price can increase nicely, and they can still win their trades. There's 750,000 outstanding shares, and the NAV is 36.26. So last trader of the day on Friday is actually getting a 5-cent discount. Okay, that is everything. We're wrapping the whole video up just under an hour. So hopefully you guys like this. I'm just trying to put a little less time into it because it is eating up my whole life. So we got a dad joke before we go. Thank you for watching. Appreciate all the likes, shares, comments, and feedback. And let me know if you just like one big Sunday video, but I might keep it either way. All right, so for the dad joke, I've got a poem for you. I'm a poet, and I know it. I dug, you dug. He dug. She dug. We all dug. It's not a great poem, but it's deep. All right, thank you. Have a good rest of your weekend, and I'll catch you in the Monday videos.